Hello and welcome to my YouTube channel. I'm Safir Ahmed, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as an early career investor. This video is relevant if you're a student of ACCA F6 UK taxation, or if you are a student of AAT Level 4 Personal Tax Finance Act 2324 student, or if you're studying taxation as part of your undergraduate accounting and finance degree. So in this question, you've been asked to calculate income tax on dividends, income tax on saving income, interest, in other words. And also you've been asked to calculate some property income, rent received in relation to the property incomes. And in a nutshell, that this task is all about income from investments and property. So the first one here, which says Mr. Z received a dividend of 10,000. His other taxable income after personal allowances total 35,000. The tax payable by Mr. Z on these dividend is. So we need to work out the tax on these 10,000 dividends. So I'm just going to take you to my Excel sheet and we go from there. So I'll show you how to calculate it. So I just wrote down the dividends of 10,000. Now remember that there is a dividend allowance of 1,000, which is applicable to everyone in the UK if they receive some dividends, regardless of their taxable income or any other income or their other circumstances in that sense. So we know that on this 1,000, there won't be any tax, as this is covered by dividend allowance. Now, the other information that they have given you in relation to the tax threshold, so they told you that this person's other taxable income is 35,000. So if this is 35,000, remember that the basic rate band threshold is 37,700. So how much basic rate band threshold is available to this person? Well, the key thing you notice that this person has out of course, basic rate band threshold of 37,700, this person already utilized 35,000 against his other income. One thing also you need to notice here that although the dividend allowance of 1,000, there's no tax on that, but it does actually use your basic rate band threshold. So you will have to deduct that as well. So how much is the basic rate band threshold available to this person? So which is 36,000 in other words, so 37,700 minus 36,000. So which gives you 1,700, I guess. Yeah, so on this 1,700, the tax rate which will be applicable is the basic rate of dividend. So basic rate of dividend, remember, is 8.75%. So which is, of course, 1,700 times by 8.75%. Okay, so you can always write maybe, on a rough work in somewhere that how much dividend is already being taxed. So you can see the 1,000 we already taxed, which is dividend allowance, in other words, and then 1,700, the basic rate band. So the remaining dividend, on remaining dividend, it will be the higher rate of dividend tax rate. So in other words, how you're going to calculate it, which you total dividends were 10,000 minus the ones that we already taxed. And on the remaining amount, it will be basically higher rate of dividend, which is 33.75%. So in other words, 10,000 minus 2,700. Yeah, so 10,000 minus 2,700 and times by 33.75%, which gives you that. So we have actually calculated tax on all of these dividend 10,000. So if you add these two together, this plus this, which gives you 2612.5. But remember, they ask you to enter your answers in whole numbers, so which will be 2612. So let me take you back to the question. So we can enter our answer here, which we just calculated, which is 2612. Okay, so a couple of marks, but there were a couple of points that you need to be careful of. I think the one thing the student make normally an error is that the dividend allowance 1,000, they do not count it towards the basic rate and threshold, and hence they end up calculating it incorrectly. Okay, so that was part 1 of A. The second part of A is Miss Y received 2,500 in interest from her building society account and 214 interest from her dividend saving account. Her other taxable income after personal allowance total 66,750. In other words, she is higher rate taxpayer. Miss Y's income from investment on which tax will be paid in is okay. Now remember, individual saving account, any interest and dividend received from individual saving account is tax-free anyway. But the other one, which is 2,500 in interest from our building society account, so that is taxable. Okay, so we're going to calculate tax on that, how much it will be. So again, I'm going to take you back to my Excel sheet and I will show you how to calculate tax on this one. Okay, so this one was of course part 1, and so this is your part 2 of this question. So we have building society interest, which is 2,500, and remember, individual saving account, any interest and dividend from that, that's, I will just write, is exempt. So therefore we will be calculating tax on that. So first thing first, remember, personal saving allowance is available depending on someone's taxable income. So this person's taxable income is 66,000 something, which is between 37,701 up to 150,000. So remember, if someone is a higher rate taxpayer, they get a personal saving allowance of 500. So that means that on the first 500 out of 2,500, this will be tax-free. Anything more than that will be taxed at, depending on which rate will be applicable. So you know that this person has other taxable income of 66,000 something. So therefore, it will be higher rate, and remember, higher rate of saving income is 40%. So in other words, that it will be 2,500 minus 500, which is covered by, of course, personal saving allowance, and this will be times by 40%. So in other words, which is 2,000 times by 40%. So which gives you 800. Okay. So this is answer to the second part of part A, 800. But you got to be careful. I didn't notice that initially as well. So this is they're asking you, Miss Y's income from investment on which tax will be paid is. So if you think about it, after personal saving allowance of 500, it will be just 2,000. So on that 2,000, and then the one we calculated, which is the tax payable on this interest, is 800. So they give you 2 marks, one for calculating the income from investment on which tax is based, and the second part of it, which is the tax payable on that income. So it's like 4 marks altogether for this part A. Okay, so I hope that makes sense. So let's move on to the next one. Mrs. J owns and rents 2 properties during 23-24. Relevant information on the property is shown in the table below. So again, it is very important that you follow the instructions. If you are AAT level 4 personal tax students, as you can see into your answer in whole bound only. Okay, so the first one, Sunny Street. Sunny Street was let from 1st of June 2023 for the remainder of the tax year for $12.50 per month. Rent is paid on the 1st of every month. Mrs. J pays 8% commission to a letting agent. And a taxable rent, remember that if they don't specifically mention, it is cash based. Cash basis is applicable. Remember, if the gross rent received is up to 150,000. So of course, in this case, it's way less than that. So the cash basis will be applicable unless they specifically tell you that the landlord has chosen to opt for accrual basis. Otherwise, we will always use the cash basis in a given situation. So, okay, so when they let this property, as you can see, is on 1st of June 2023 for the remainder of the tax year. So how many months that will be until the end of the tax year? So if you think about from 1st of June to December, that's 7 months. And then, of course, you have January, February, March, and you need to be careful because April 1st is going to be included in this year as well. So in other words, that 7 months from 1st of June to 31st of December, and then from 1st of January to 1st of April. So these 4 months, in other words, January, February, March, April. So it will be 11 months. So the way you will calculate is 11 times by monthly rent. So 1250 times by 11, which gives you 13,750. The key point here is to include April 2024, because remember, until 5th of April is still the tax year 23-24. So that's where students normally get confused of why we are including the rent received on 1st of April 2024 as part of tax year 23-24. The reason is we are using cash basis, and of course it is within the tax year. So 1st of April within the tax year. Now remember, for example, that if in another situation, if the rent received date was 20th of April, you would not include it in this year because it is received after 5th of April. Does that make sense? And allowable expense in this case is 8% commission, which is sales agent commission, so which is based on your taxable rent. So 13,750 times by 8%, which gives you 1,100. Okay, so that's in relation to the first property. The second property here, which is Cloudy Close. Cloudy Close was let from 15th of January 2024 for the remainder of the tax year for $420 per month. Rent is paid on 16th of every month. So you can see that in this case is slightly different from the first one. Mrs. J paid $2,100 to repair the roof and chimney in December 2023. Okay, so the first thing first is let from 15th of January 2024 for the remainder of the tax year. So if you think about it, 15th of January, 15th of February, 15th of March, these 3 payments. The fourth one will be 15th of April, which is after the tax year, which is after the 5th of April. So therefore, we won't be including that. So in other words, 15th of January, 15th of February, 15th of March. So 420 times by 3, which gives you 1260. And remember, the repair and maintenance we can claim as an expense, or the landlord can claim as an expense. So therefore, that this 2,100 will be allowable expense. But you got to be careful that it's not a capital expenditure. So capital expenditure is, remember that any enhancement expenditure, if there was any extension to the building, or maybe building a garage, so that could have been different, because remember, capital expenditure is not allowed, but revenue expenditure, as long as they are wholly and exclusively in relation to the property, the revenue expenditures are allowed in here. Okay, now part C of this question, which is identify whether the following statements are true or false. The first one is an additional rate. Taxpayer will pay tax on dividend at 45%. We know that that's false because remember, dividend tax rates are 8.75%, 33.75%, and 39.25%. A landlord replaces a broken washing machine with a new one. The same model of washing machine was as the broken one would have cost 700, but the landlord decided on an improved model which cost 900. The landlord can claim 900 as an allowable expense. I must say that this landlord is quite generous. Okay, having said that, remember in terms of the replacement item, that is the like with like items, 900 will not be allowable, only 700 will be allowable. So of course, that they're asking as the landlord can claim 900 as an allowable expense, that's false. We know that the landlord cannot do that. Okay, so thank you very much for listening. I will be back with the other video. So I'll be recording a series of videos on all of these practice assessment tasks. So thank you for your feedback as well. Some of you have been asking for this as well. So I really appreciate your feedback, and I really appreciate your input, and I really appreciate your participation in it in terms of listening to my videos. So thank you very much for that. I will be back with another video. Bye for now.